Hello.
Ama ya bom cara. Isso é. Vai. Ami. É isso. Não é logo, não. Sana mano. Salma. Mimi na patai. Na tahan de post.
Hello.
I network, I don't know. It's messed up. So
Can you hear me? Can you hear me? Hello, someone.
Salma.
Samuel.
Ama onu da Salma. Salma. Não é assim do tá. Abata mo ni ko.
Hello.
Esta nada.
What is that? No.
Não faz.
Can you hear me? Samuel.
hello, Pumaya.
Can you hear me?
Yes, please.
Now it's
Let's go.
clear.
I can use.
Yeah, at first I couldn't hear anything. You can see my screen.
Good evening, Doc.
Yeah, Chai Alpha.
Yeah, I do your side.
I did, Chai. I did. How the work day?
Yes, sir.
How the work day?
You say,
I said how is work?
oh, small. I know they feel was.
Um
I know they feel was. So I know they were cool. I did house
uh
stay
okay,
since
okay.
last year. I shown the work.
Oh,
Yeah.
okay. Oh, then I figure you
Mm.
still dey go work. Then I figure you still dey go work.
No, I dey feel imbalance. I dey feel imbalance, so I no feel work like really well. Mm.
Why is it like some hip pain or what?
Hello,
Is it hip
is
pain?
it
Are you having some hip pain?
hello?
Yeah, I can hear you. I'm asking if you are having any hip
No, I'm
pain.
not having hip pain too.
Uh, okay.
No,
Ah,
no
okay.
hip pain.
Yeah. Yeah, so yes, yeah, or like what did you want to discuss? I think you wanted to discuss something.
Like your breakdown to when you are about to trade, when you decide today you are sitting by the computer, you are entering the market today, like from top to entry, from analysis to entry. I want to see how, and then if you can explain to me too.
Oh, okay. But what style do you use? It depends on what you do.
So me, I don't want. I'm in the phase of now learning different things. First, I was trading a trend line. When I started trading, I started using trend line, and then I moved on to this what is the name ICT, and then I'm learning SMC currently.
Mm,
And then I moved to CRT, and I'm learning SMC, and I'm trying to combine all together, sort of.
if you do that, you confuse yourself.
Yeah, it's true. I feel already.
Yeah, if you just have to pick one, you can't combine everything. If you combine everything, you end up confusing yourself because sometimes one like strategy will tell you
Yeah, that
to
is
it will tell you to go long, and another strategy will tell you to go short. Then you will not
yeah,
know what to do. I don't know if you get me.
that is true.
So sometimes like
Yeah,
when
I get you.
yeah, when you end up like trading like more than one setup, those are like that's the challenge.
Yeah, it's true. It's true. But I don't know I don't know what is coming to mind is maybe there's a common denominator among all of them. So I'm trying to figure it out.
Yeah,
And maybe
yes.
that can be the sweet spot to getting. If I have this perfectionist mindset, then I shouldn't be trading at all because trading, I've placed it in my mind already that there are bound to be losses.
Oh yeah, like that's what I want to do. You can't trade like different strategies. Like if you look at you just have to select one. If you look at the different one, let's say for example, SMC for instance will say that I don't even remember what SMC does, Kara. Um, they will tell you that
Yeah,
you are looking for. So in SMC, I think they also use other blocks and all that.
yes, please.
So they also look for other blocks like this, waiting for the market to come to, waiting for the market to come to the other block, like up in here. I don't know if you can see these kind of taps. I don't know if you can see
Yeah,
them.
yeah, I can see it.
Mm. So like this, for instance, is an order block. So even the order block, right, they have like characteristics. They will tell you that sometimes they want this body to actually like engulf the entire of this wick. That shows like strength. So if this, for example, if you look at,
Yeah.
if I think when we go to the other side, we'll get a better engulfing, like this one, for instance, where this one engulfs the entire thing. You can see that this wick and everything is engulfed within it. So we expect that the next time the market should come to
Yeah.
this level, the opening of the order block, they expect that the market should react, which is something that's here. This reaction.
Mm.
You can even see that there's another order block over there, but that one was not mitigated. It almost got mitigated, but the market didn't get there. You can see there was also some small level for the market to go down to meet it, but it never got there.
Mm.
So me, what I do is, I've closed out the strategies that I typed up. I think they are here. If you look at these strategies, I use number three. Everybody, that's the one that I use.
Malaysian supporter.
Yes, just the typical support and resistance. The typical support and
Okay.
resistance. So if you realize like the way the market moves is the same for everybody. Everybody has agreed that the market creates highs and lows. The market
Yes.
goes up by creating highs and creating lows. All the way from
Yes,
down
please.
here. High, low, high, low, high, low, high, low. You can consider this as a high or not. High, low. It's just the same thing. High. And then we are pushing a potential low to continue going high. I don't know if you get me.
Yes, please.
So if you take this thing out, you can see the market is going higher highs and higher lows. That's basically it. So support and resistance will tell you that when the market goes high like this, you should expect the market to come back and retest something here. So
Mm.
ICT and SMC and Co will tell you that, you should look for the breaker block around here on top, somewhere there.
Yeah.
Or you should look for
Yeah.
a fair value gap within here somewhere, or an order block within here somewhere. That's where the market will come and bounce and go up.
Yeah.
But
True.
support and resistance will tell you that the market only reacts to a place that it finds support or resistance. So it can come and react from
Mm.
here. Sometimes you may not even get to this other breaker block that you are thinking about. The breaker block that's here. Sometimes the market will not get to it. Like here, for instance, if the breaker block was sitting here, the market would have never gotten to it. You can see the breaker block
Yeah.
is down here, but the market stopped over there. The market never pulled
Yeah.
down to this breaker block. It just stops here and then it continued going up. You understand? So your goal as a trader
Yeah. Yes,
is
please.
your goal as a trader is to trade from
Yes,
here,
please.
from this low all the way up to your take profit level before this next pullback comes in. Your job is to catch the
Yes.
the, the market from somewhere here to where your take profit is before this next pullback comes in, or from here to the next level before this next pullback comes in. I don't know if you get me.
Yeah. Yes, please.
Uh-huh. So the question now is, how do you catch it? There are so many. So the various disciplines, the various strategies that the various people use is simply to answer that particular question as to where the market will stop before it continues the momentum towards the original direction. That's the trend. So I think I've mentioned it to you before. The two questions. Those two questions are the most important. Number one is which direction the market is going. I don't know if you understand.
Yes, please.
So for example, if this market was going up, so usually what I do is I put them in binds. Like I try to break them into binds so that I can understand. So this was a high, right? So if we mark out this
Yeah.
high, something like this, and the market broke it, it means that we are expecting to pull back. So we pull back to this particular level. So this is the low, and then this is
Yeah.
and so this is the new high. So the market breaks it, pulls back down here. This is a low, and then this is a new high. Then the market breaks it again, pulls back down here. This is a low. Then this is a high. Then the market breaks it and goes all the way up to this level and gives us a high. And then this is the low. And then it continues again. So your job is this. First of all, you want to, like I said, no, the first thing you want to do is identify the direction. You see. So in this particular market, we have identified that the market is going up. This market is going because it broke this first
Yeah.
high right here. It broke this first high right here, and then it went up. Then it created this high, then it came back to create this low, then it broke this particular high again, went up. So we're expecting it to make a pullback again, and then we'll join the market to continue going up. Is that not the case? So we've identified number one, the direction, which
Yes.
is in an uptrend. And then number two is when will we return to the direction that was identified earlier? So the direction was up and now we are pulling back. So your job is to find out when will we return to the up so that you continue following the up. So that's where the different strategies now come in. Support and resistance will say that you should wait for the previous what's it called resistance to become a support level. So this was the previous resistance. We are expecting the markets to drop maybe down to this level before it continues going up. But as you can see, it never happened.
Yes, please.
Uh-huh. Support SMC and Co or ICT and Co will tell you that there's a fair value gap here. So the market probably came into that fair value gap to mitigate it and then go up. That's what the smart money people will say. Uh-huh. They can identify that fair value gap
Yes.
or they can identify this other block right here or this fair value gap down here and then to this other block down there. So all these things are just ways that you try to predict where this pullback will end before going up so that you can join. That's just the aim of on all these strategies. Their job is just to try and find out where will the market stop. Will the market come and stop here? Or it will further come down and stop here, or it will further come down and stop here before going up. That's everybody's aim. So if you can answer that question, if you
Yes,
can answer
please.
the question of where exactly the market is likely to stop, then you've unlocked everything. But the one thing you have to understand that you cannot control the market. Nobody controls the market.
True. True.
So you understand nobody can predict with 100% certainty and nobody can control the market. So these predictions that we are doing is not 100%. So
Yes, please.
the chances that a market in an uptrend will continue to be in an uptrend is 50%. So you are already off to a good start just by following what the market is doing. You already have a 50% chance of being right. But what makes our win rate very, very low is usually
Okay.
trying to predict exactly where this market will stop, exactly where it will stop before it continues to go up. This place. That low, no, before it continues to go up. No, that's where we usually make a lot of mistakes. This place. And that's what reduces our win rates. Because other than that, everybody knows that if this market pulls the back at a point in time to stop and continue going up because the market is in an uptrend and there's a 50% chance that will happen. So in such a case, your job is to select which particular strategy, I mean, which particular principles or theories of where the market will reverse are suitable for you or are comfortable to you so that you adapt those principles and then you apply them to your trading style. You apply them to your trading, which becomes your style.
Yeah, true.
Yes. So let's down to the next question. So I think the question now is when will this market return? So the market in basic terms, in basic support and resistance terms, if this market pushes up, okay. If you go down to the lower time frame, you realize that the market didn't just go up, it went up like this, came down like this, went up like this, came down, pushed up plenty like this, came down small, went up like this, came down like this, went up like this, came down like this, like this, like this. It may look like this on the smaller time frame. Do you understand?
Mm,
So the
yes,
market the market never moves in a straight line like this. It moves in pulses like this. So the same way that this market, this one has gone up and is likely going to pull back. This pullback too is not expected to come down straight like that. It's expected to come down like this. So it maybe may consolidate, then push down small, comes back up like this, then pushes back down, comes back like this. You understand?
yes, please.
So this is how this pullback, this particular pullback, this one, this is how it will look on a smaller time frame.
Yes, please.
So there are two. So I usually say that there are two categories of traders out there. You have those that predict where the market to stop. You have the predictors, and then you have the reactors. We have the predictors, and then two you have the reactors. You understand?
Yes, please.
Yes. So the predictors, that's the ICT, the SMC, those people, they use other blocks to predict exactly where the market is stop. So they draw these things before the market gets there. They draw the
Okay.
they draw the other blocks and put buy stops. I mean, they put limit orders at those places, so they can put a limit order on this other block,
Uh,
expecting that when the market comes to a certain level where it already reacted and there are orders left there, the market will react from there again. So this is what they do. So they already have a predetermined thing, so they can take their profit at the highs here, or they call the places where there's consolidation. They say there's liquidity somewhere here, or even somewhere here. I don't know if you get me.
yes, please.
Uh-huh. So, but the question is, you can have more than one order block and you don't know which one will work. You can have this other block
Uh,
here. Nobody knows which one has. They always keep lying to people that, oh, this one has the liquidity and this one is where the orders are. Nobody knows. Don't let them lie to you. Nobody knows. Nobody has access to anything. They make it seem like they have access to the books and they know where the liquidity is and the what, as if they have some 100% win rate with their strategy. It doesn't exist. That's They call it the holy grail. It doesn't exist anywhere. So, in
mm,
my theory is that why not let the market reverse? Because the market, I mean, has made this high, and then it has started from here, and then it has gone all the way up, and then it started to pull back like this. But this pullback is represented by these highs and lows, these highs and lows, these highs and lows. So why not let the markets reverse by telling you that it has started creating highs again, higher highs and higher lows, which is telling you that it has now switched to bullish again. Do you understand? It has switched to bullish again, like this. So your job
the
is,
line is breaking.
you didn't hear me. I'm
No,
saying
I didn't hear.
I'm saying that The market started from this point, and then it moved up like this. On the lower time frame, this is how you saw it. You saw it move up in pulses, up, down, up, down, up, down, up. Then it broke this and then came
Yes,
down here,
please.
but it also went back up again. And that
Okay.
was that was this leg, that's this leg. So now we're expecting
Yes,
this leg.
please.
Yes, we're expecting this leg, this pullback leg. We're expecting it to stop. You understand? At some point. And how do we know that it has stopped?
Yeah.
We saw it coming down, creating lower lows and lower highs. Lower lows, lower high, lower low, lower high, lower low. Then it created it broke this high, but I mean sometimes the market does that. It's inefficient, so it does that. And then it creates this lower low again.
Okay.
So, so your job is just to wait for it to switch from this bearish to a bullish trend. Once it switches, then you find an entry point and then you get in. So now you are now waiting for this lower low to now get
Okay.
swept.
Okay.
Now it got broken here. Then you have a high, then you have a higher low, you have a higher high, you have a higher low, you have a higher high, you have a higher low in that order. So you would have realized that this whole move is what is going to appear on the higher time frame as this. On the higher time frame, it's going to appear like this.
Yeah.
Do you understand?
Yes, please.
So let's just pick an example. So the other thing that you need to identify, you need to be able to answer is what kind of trader you are. And when I say what kind of trader, that one depends on how much free time you have to trade. We have that's the one that we usually read every day. We have the position traders, we have the swing traders, we have the intraday traders, intraday, and then we have the intraday, and then we have
Okay.
the scalpers. All of them do the same thing. It's just the time allocated to trading that's different. So for the swing traders, they usually use the 12. You can see the 12 month that I have here. You see them going
Yeah.
from, yeah, you see the position traders going from, they don't go less than 3 months. So they can look for a trade. So somewhere here. So you can see this is exactly what I was talking about. You see that this market moved from up from here to here and then it started pulling back. So
Yeah.
your job was just to find out when this pullback will end and then when this next leg will come. So your job was to find out when this pullback will end. And then once you see evidence of it ending, you will just drop it. So the position traders, they would have come in somewhere 2019, 2020, and till now they are probably still holding their trades. Those are the big, 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 big corporations. They'll still be holding these
Mm.
trades. You understand?
Okay.
Uh-huh.
Yes.
Yeah. Then we have the next one, which is the swing traders. The swing traders, they usually stay between monthly, the weekly, and then the daily. So sometimes they look for their setups on the monthly and then the weekly, and then they execute on the daily. Or they can look for setups on monthly and then execute on weekly. Then we
Okay.
then we have the intraday traders. They use the daily, the 4 each, and then the 1 each. That's the intraday traders.
Mm.
And then we have the intraday traders. They don't hold trades like they do. That's us. We don't hold trades for the entire day. Just a period within the day, and then we are done. So usually we stay on the 4 each, 1 each, 15 minutes, and then sometimes 5 minutes. And then you have the scalpers. The scalpers are those that stay below everything. They stay on the 1 minute. They stay on the 1 minute, and then the seconds time frames. Yeah, they use these seconds, sometimes 30 seconds, 15 seconds, 1 second even. As for them, mostly you will not see a human being like scalping. If you see a human being, usually they are staying around the 1 minute time frame. 1 minute, 5 minutes, 1 minute, 5 minutes, 3 minutes. But if you see people going down to the seconds, it's usually these what do they call them? Those robots that they used to trade.
Oh, okay.
the trading bots. Yeah, they usually execute within seconds. So your job is to identify
Okay.
how much time you have towards trading, so that you can decide on like which kind of trader you want to be, whether you want to do a simple what's it called, position trading, where you just execute a trade and then go about the rest of your years. Or can you still hear me?
Okay.
Yeah. Or you want to do in intraday or intraday. So let me pick an example. There was a trade that the sell that we took, that was, when was that? That was yesterday. So I usually use this weekly session breaker just to identify where the week began. So I've been trying to identify where this was, the whole of this was a pullback. The whole of this. So I just didn't know when to end. I don't know if you remember.
Yes, please, I remember.
Uh-huh. There was a shot. I took a shot from here, and then the market stopped me out, and then it just confirmed that it was going bearish again. So I just waited for this pullback. This was the pullback I was just waiting for. So that I knew that if this pullback comes in and momentum comes in, we'll take out this low. So if you realize, I had my take profit around 44.80. That's just where I left it, 44.80.
You said momentum.
Yes, I was just waiting for a shift in momentum. And as you can see here,
Momentum comes.
this high was taken. The liquidity people will say it was liquidity. But me, I see it as a high that has been rejected. That's a double top. That's what I'll call it. You have this top, and then you have this top. That's a double top.
Okay.
Do you understand? But
Yes, please.
my biggest problem was the support level. This was my biggest problem because it was tested multiple times. It was tested once here, tested twice here, it couldn't break. Tested three times here, it couldn't break. Tested four times here, it couldn't break. So when it came down here and retested it, it was now two things. If this support, which is very strong, should break, then definitely we are going to see these lows. That was just, I just knew this is something that you just know when you, I mean, the more experienced you are. But I just didn't know whether
Mm,
this rejection will cause the market to go higher like this, to create as a triple top before it comes all the way down, or it will stop somewhere there. So I now have to go into the lower time frame to watch and see at any point in time that the market's momentum and direction should change. I want to join. So I was just now waiting for that trigger.
okay.
So that's when I went down to the 15 minutes.
So is there
You said?
okay? So is there like a particular time? Is there a particular time you observe for market momentum to change?
No, no. At any point. So the thing is that the whole thing about timing and all those things, no, I feel like they are all just things that people use to sell their courses and things to people. Them nobody knows when momentum is going to come into the market. We can predict. You can say that okay, because New York session will open at 1:30 or 1 o'clock, maybe there will be orders that will be executed at that time. But the fact that the market is opening at that time doesn't necessarily mean that they are going to place trades at that time.
Yeah.
The market can open. I've seen place times when, especially with gold, where the market will close on a Friday when everything has closed and everything has gone down. Asian session, then the market will be moving violently. So are you telling me that people are placing
Mm.
trades on a Friday evening during Asian session? It doesn't make any sense. Like that's why I said there are two types. Your job is just to react to whatever the chat is giving you. You don't care about this timing and what timing and what. Your job is just to react to what the market is doing.
Mm.
So back to what I
Okay.
was saying. So when I saw the market pulling up and then I saw the exact same thing that happened here. It was the exact same thing that happened here. I don't know if you can see
Okay.
it before I see it. You see that we had this one rejection and then the market came back again and rejected this. Can you see it? The
Yeah.
same double top that we had at the top then. It was the same double top that we had here. This first one was this one, and then this one was this one. So the ICT people will
Okay.
say that that was a liquidity grab. The market grabbed liquidity from there
Mm,
to mitigate this other block, which is somewhere here. But the question is, how do you know that the market was coming to mitigate that? You don't know. You can't tell whether it's this other block or it's not that. You don't know. Don't nobody let nobody lie to you.
mm,
But I
it's
have
true.
seen with my two eyes that the market has rejected here, has come back to it and rejected again, and it has changed what's it called, direction and momentum. You can see you created this low, created this high, created this low. So this is where I got freaked out at this point. I took a sell here. I don't know if you saw the post. When I saw
Mm,
this, yeah, this candle is a very, very strong candle, which usually confuses me sometimes. So initially, I considered this rejection with this red candle as number one, and then this one as number two. And then I took the sell here. But the market
okay.
just came back and stopped me out. And when I saw this market close right, this candle close right back inside, I knew that this was a fake. And I knew that this was a double top. So I didn't even wait for,
Mm,
ideally, I would have waited for the break of this low, but I didn't even wait for the break. I just knew. Okay, I've seen this one like 20 times. So I just knew that this was it. So that's when I executed. I just took the sell from here.
wow.
I'm sure you remember. And then I kept my stop loss up there. And then I was targeting this low. In fact, I even went lower because I knew that, like looking at this, you see, sometimes you just know. Looking at all of this, there's some liquidity. That's what the liquidity will tell you. There's plenty liquidity here because people are buying,
Mm,
buying, and they are putting their stop loss down here. So I just knew that if the market is going to go down, it's going to be violent, and it won't just respect this level. It will blow past it small before coming back up.
hello, I didn't hear. You said because people are the line broke.
Yes, I'm saying it's because people are placing their stop losses here. All the people that
Yeah,
you see this violent move up. If you were to take this violent move
yeah,
up, you place your stop loss here. And the markets came back, retested that level, gave you another move up. You place your stop loss here. Came back, give you another violent move. You place your stop loss here. And even here,
yeah.
even this uh, bullish engulfing candle, you can say it was a violent move. You place your stop loss here. So they were playing the stop losses here and playing the sell stops as well. So there was plenty liquidity lying down in this
Mm,
void, in this big void. So I knew that if the market should come through that particular level, and they were connected charge on. Can you hear me?
yeah.
I'm saying that. So
But
I
it's like your voice,
you, you said,
it's like your voice went down a little, but I can hear you now clearly.
uh-huh. So I'm saying that I'm coming. Let me just connect my pitch. Anyway, the work. Then let me wear the picture. Okay, okay. Thank you. Uh-huh. Can you hear me?
Yeah.
Uh-huh. So I was saying that. So the moment I saw this candle close back within that particular range, I knew that this was a double top, a rejection.
Mm,
And you can see the candlesticks. This is what tells you that there's momentum coming into the markets. Just look at this candlestick going up, and look at this candlestick coming down.
yeah.
Can you see these sizes? Compare these sizes to these ones that have wicks. You can see this one doesn't have any wick. It
Yeah.
shows you that there's serious. So you can see that this one, we are not waiting for some time, some magical time that the market will open and you're expecting. No, 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 no. We want to see with our eyes how the candle forms. Do you understand? And this one, you can see with your two
Mm, okay.
eyeballs
Yes, please.
that this candle has opened without a bottom wick and it has pushed all the way up and it has close to its top wick. It tells you that the market has a lot of, this is a serious candle, like there's momentum inside. And the same thing happens. And since I'm
Mm,
looking for a short, I don't really care about this bullish momentum. I want to see that same momentum but in the bearish direction. So all I waited for was this
okay.
particular candle, and then I knew that was it. So I just executed here. I think it was even somewhere here, and the market came back to test us multiple times. I think I even posted this.
Yeah.
You can see there was one retest, two retest, three retest, four retest, five retest, six retest. The market, I just knew, like when you start seeing these retest on your entry level, it just tells you that there's something big coming. So this market was just waiting for New York session to open. The New York session opened somewhere here. You can see 1 o'clock. So immediately New York session opened, more orders came into the markets, and then the momentum just came in and just pushed the market towards our direction.